Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's daily chart, looking at where price came from, where price ended today, and where price is likely to head tomorrow. So let's dive right in. We've had quite an exciting week with Wednesday's breakout candle. Today was a nothing burger, a little up, a little down. Ultimately ended in a doji, much like last Friday. So are we going to get some additional action tomorrow? We'll just have to see. Looking at the daily chart, we had this downtrend channel. Okay, resistance, support starting in this wick, heading below these candle body lows. Hey, this was our channel. We were inside of it, right? We came up, we set the top boundary, we came down and tested it, we rode it down, we came back up, we broke out of it. So it didn't really hold for an extremely long amount of time. We basically saw that sell-off with the CPI, PPI, FOMC, and then just puttered out a little bit and then started heading higher. We were, for those of you who follow me, playing puts a little bit in here because there was not a clear indication that we were actually heading for a breakout. More or less, this whole, I'll highlight it, this whole range here was very choppy. It was a wide range, so it does allow for, positions to go bad if price runs in the opposite direction. But if you do, if you are trying to play the chop, because again, as we're coming up here, we're looking at this middle of this channel, potentially for it to come back down and fall down lower, down to 235, right? 230, 230, if it would have continued down. So those are things we were looking at through that week until we really fully got this breakout candle yesterday. That has changed the direction, and we're watching to see, is it a fake out? So far, today's price action shows that it was not a fake out. Okay, we broke out of the downward channel, bearish channel. We broke out, okay, yesterday. We tested the new channel's upper resistance line. We also back tested the broken downtrend channel. Okay, we set a daily fair value gap, bullish fair value gap. So what does that mean on the daily chart as far as the smart money concepts goes? It means we could trade back into this fair value gap to continue to see, does it want to hold as support? Okay, and then we really want to see this fair value gap propel price in the opposite direction. Okay, so oftentimes with fair value gaps, similar to what happened over here, wick to wick, right? What happened? We kind of had a day above it after it was set, traded down into it, traded back up through it, traded down into it, traded down into it, right? All the while we kept it open, and then eventually we got the propulsion that we wanted to the upside. Okay, the same thing could happen here. We could trade down into it, we could trade up out of it, we could trade down into it, we could wick down through it, closing candles above the low of the fair value gap, still bullish. Okay, and what we want to do is we want to mark that off as the 250. 250 is the close of the fair value gap. If we start closing candles below 250, it's done. We're quite possibly going lower. We might fall back into this channel. Okay, but as long as this fair value gap on the daily chart at 250, that's going to be our pivot point for like full bear mode again. Okay, if we keep that open, we should see price continue to propel to the upside. We want to see that propulsion. We want to see it explosive like this gap up was. Okay, so we could see that. We're just kind of riding the RSI line as well. We're a little bit flat, but we're back above the 50. Okay, which is technically bearish. So even if we came down a little bit, or bullish, so even if we came down a little bit, we could see that continue to the upside. We are above the control line on the RSI too. It is a lagging indicator, but it does still offer some kind of indication. So we'll just have to see what continues to happen on the daily chart, and we'll see this as I drop down lower. But we have our three different levels as far as potential top tomorrow, potential bottom, and basically like a containment of a certain area. So right now in this channel, we're closing above the median of the channel. You can see right here, this median line. Same thing with this channel right here, right? It's just the middle of the channel. Okay, and we tested it, which also happened to be the spot where the down channel would meet the up channel. We tested that today. We bounced off of it. Okay, so what are our levels tomorrow? We're looking at 267 being top of the channel. If we were to run up there like we did, we tested top of the channel today. So we could test 267, basically 267. Okay, we're also watching the 258.87 pretty closely. That's going to be containment of this upper boundary, which is what we tested today. So do we want to stay in this upper boundary of the channel? If we give up 287.87 or 258.87, then we're potentially testing the lower boundary if we were to do a big fall. Okay, or if we were to gap lower down here, we give it up. We could trade all the way down to 251.04. That'd be a pretty big candle. It'd be a candle similar to Wednesday, depending on where we opened. But could trade down and test this boundary, still be in the fair value gap, still be a valid bullish channel. If it started to test this boundary, it would be a fairly safe long entry, with your stop loss being, maybe down here at this candle body low, or maybe just outside of the fair value gap. Right, I'd probably focus on the candle body low just to make sure, or even the wick, just to make sure if I was going long here, I didn't get stopped out too easily with the wick down on the daily chart. Okay, and that would also put us technically back into this bearish channel. So I'm watching this bullish fair value gap. I'm watching this current upward channel. It's a very clean. It's not quite like this impulsive move that we had down. You can see we're just kind of up, doji, down, bigger doji, up, doji, right? Do we catch another down? Maybe. And then another large bullish bar, potentially. So we'll just see. Or does it kind of like trickle down, trade sideways-ish inside this candle from Wednesday? Again, eventually, maybe tomorrow, maybe Monday, maybe even Tuesday, meeting back up with that support line on the new bull channel. And then could we see it rip back up with one or two candles again? The longer it takes to test this support line and that we close in these small candles, the further out we get on our channel, the higher the support line is, also the higher the resistance line is. So tomorrow, our resistance line is at 266.84. By Monday, that level is 268.38. By Tuesday, it's 271.17. So just keeps getting higher as we walk it up, depending on where we're going to want to test that resistance again. So let's drop down into some other charts. We'll look at the 4-hour chart today. Again, we had that 1-day fair value gap. Now we also have a 4-hour fair value gap. Again, we're watching the support to hold. So we're watching price to trade. If it trades down, trading down to keep that support line open, at least with candle bodies. Even if it's not wicks, we want candle closes above the support line. And we want to potentially test this fair value gap if we start to trade down. Okay, I also marked off the top from over here at 254.81 as an area of interest as well, because we had a wick here, there were some important points there. So mark that off. We got the fair value gap. If we trade down lower, watch for support to hold or break. Right? We still have our bearish channel. If we were to break below the low of the support line back into the channel, we'd be looking to take out the fair value gap and head even lower. Okay, this diagonal line right here, this is a greater symmetrical triangle that we're in, as well as this diagonal line here. So if you shrink it up a little bit, you can see where it comes from. You can see where the apex is. So we are watching that as well. Came from the top over here back in July. Tested it, right? We've tested this now a second time. This is the second test of resistance, second test of support. Looks like we're trading up to resistance. I wouldn't expect any more than, the 270, depending on how quickly we get there, 271 range. I would expect that we test this again, and I would expect one more breakdown to test support. And then on that third test of support, I expect we're either going to see it rip up and break resistance or drop down at that point. to test this 4-hour fair value gap that's down at the 228 and even lower. So really watching this symmetrical as we play out, but we have a very nice bullish channel that's just being walked up. Right, so I do expect anytime we come back at support, it's an awesome chance to get back in now that it's identified, get back into positions long until we come and test this symmetrical triangle resistance line. Okay, we also have the previous month high up here at 280. So watching that, but again, to get back up there, no matter which way you look at it, you're breaking this resistance line of that symmetrical triangle. That's going to be extremely bullish if we break out of that. I would say at that point we're looking at 302 and some change, maybe even higher, right? So that's going to be our indicator, like that we're looking for that, major bull run if we break out cleanly from that apex of that symmetrical triangle. Okay, we do have a bullish look on the 4-hour. It's a great time that if we can catch a return to this support level back into the fair value gap, you'll see RSI come back and do another test on the moving average line. Okay, and then we'll see that potentially run price up to test this resistance line up at 270. I did enter contracts for 270 that are 2 weeks out, and I do anticipate that by 2 weeks we'll be looking at something around that price. You can follow those trades. My call outs are live in Trader Helping Traders Discord. The link is in the description below. Please don't forget to smash a like and subscribe and share with all your friends if you like the content I bring you. Let's drop down into the 1-hour chart, see if there's anything else going on. Again, I made these horizontal lines where you have just a green bar, red bar. So this, again, represents our kind of range, that our max range tomorrow, no lower than 251, no higher than 267. So if you're selling covered calls or if you're selling cash secured puts, I would be looking at similar ranges to that. Again, that kind of bull bear pivot, 258.73, right? If we were to get down below 258.73, we could be targeting the low of 251, the support line. Right here, we have a 1-hour fair value gap. Below, we had a 4-hour and we had a 1-day. Okay, so now I'm really looking for price to draw back into here. And that gives us a better target and some confluence where a 1-hour is inside of a 4-hour, inside of a 1-day. So we're really targeting this fair value gap, right, which also happens to be in or around this trend line of support. Okay, so do we see price trade down into this fair value gap? If it does, we do know that it's magnetic, but maybe, maybe it does right now. Maybe it runs a little higher and then it comes back down and tests it. We would like for it to come back down and test it soon as far as the bulls go, because if we're testing it over here, we've already given up the support line. And so would it hold or would it give out again and drop us back down to test this symmetrical triangle support line? So things we're watching. We also have the bearish fair value gap that we know we're probably being drawn into. So if we were to draw this out on the 1-hour time frame, okay, we have closed some of those other higher time frame ones that were looming, but look where that puts us tomorrow, right? If it were to hit it tomorrow, 267. Okay, that would be a test of that fair value gap. I would expect some reaction, whether that's significant back down to support, or if we just run up, hit it, kind of come back down, run up, take it out, right? And then we could take it out and touch that resistance, or we could hit it with a wick and still respect it, come back down again. So things I'm watching for, but we do know that this is magnetic. Price is being drawn into it, right? Because we came down. We never even gave it a shot to come back and test it. We just straight up repelled off of it. Okay, now we're being drawn back into it. Fair value gaps are magnetic. Eventually, price is drawn back into them. Not every single one of them fills, but they are a very good smart money indicator as far as drawing price in. Even if it doesn't draw it all the way back to it, the more short-term time frames, it's definitely more accurate. Some of the higher time frames from like way back in the early days of Tesla, some of the fair value gaps never have gotten filled, but they are fairly accurate and just a good, kind of compass as to, a target, if you will, where price might head to, right? But we have a lot of other things in that range. We have this bullish channel, right? Confluence. We're looking for confluence. We have bullish channel, fair value gap, apex of a symmetrical triangle, previous month high, order block up above. We have this is a swing order block, but we have internal order blocks. Another swing order block in here. Okay, we have an internal order block in here, so we know price is driving up to all of these things that are sitting in the same area. Time is the X factor. How long does it take to get us there? The longer it takes, the higher the price may go. But also, you know, we're looking for, price to trade up to those levels fairly rapidly as well. So we'll just have to see, because again, with this, even though we have this bullish channel which is walking price up, we also have this declining resistance of the symmetrical triangle, which does also walk price down from the ability. Like if it was to hit up here, it's 275. If it hits all the way down here, it's 271, right? So we have a couple of different trend lines that are telling us different things. Even though it's higher on the bullish channel, right, it's also lower on the resistance from the apex. So we would like, if you're a bull, we would like this to run up and hit these levels soon, so that we can look to exit our positions, unless it's a breakout. If it's a clean breakout, you might be using that as an indicator to add to your positions as we potentially make a rip up to the 294 and above levels. Okay, let's drop down into the 15-minute chart. In the 15-minute chart, you can see we also have some 15-minute fair value gaps, right? But we really care about the confluence across the charts. And so I'd say this 15 inside this 1 hour is a more likely target, somewhere in this 168 range, right? So tomorrow's high, possible high, 266, 267, right? Could we break out a little bit, touch the negative fair value gap from the 1 hour? Right? Do we buy a little bit more time? Do we head up higher so that we get the confluence of the 15-minute fair value gap and the 1 hour fair value gap? Entirely possible. We do just know that the end, again, the end target is coming up to test this resistance line, no matter how long it takes to get there, right? And holding the support line as we walk up and eventually intercept the resistance at some point in time of the symmetrical triangle, right? Which will eventually cause us to come back down and test the bull channel support, or come back down even further. Eventually this channel is going to break. Unless we just break out, it's going to break, and we're going to come back and test this resistance. If we can get outside of this previous bear channel, where we're coming back to test it down here, right? Because what if we just kind of walk this up, right? Hit it. Maybe this is earnings, right? Maybe we get all the way to earnings, and then it gets dropped, and we come back down. Maybe we take this, swing order block, hit it by a wick, right? Come back up into the channel or fake breakdown, and then, run it back up or drop it from there, right? So that symmetrical triangle is probably more important than any of this short-term, bear channel, and just watching this fair value gap, in relation to the symmetrical triangle. So some of you guys who are learning from me and starting to learn from me too, like, I teach and preach smart money concepts, but I also use a lot of, traditional indicators and different things, just tools that I know how to use. They work for me. I think that just relying on one thing doesn't always give you the clearest picture. And so that's why I do things like draw trend lines, which isn't, a smart money concept per se, but it does show where, diagonal support and resistance is. And diagonal support and resistance can be very important when you're looking at things, because horizontal levels aren't the be-all, end-all of everything. Just like trend lines can be changed and overshot, fake breakouts or breakdowns or false breakdowns, right? You can also have a level hit and ran through and then come back down, or hit to the downside, rip through, and then come back up. And you'll say, oh, level hit. You think, oh, if it gives that level, it's going up higher or it's going down lower, but then it rips back in the other direction. So just like trend lines, levels are just a gauge, right? So you got to find what works for you and what makes sense to your analysis. I do like trend lines because they do give a nice idea of, oh, look, price is going to continue to do this chop, 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 in a upward fashion in this case, until it either gives up support or it breaks out, but even a breakout is going to come probably back down into the channel, right? So what you're really looking for in this is you're looking to sell the tops, get back in somewhere on support, right? Or if you're already in a long position, say shares, maybe you're riding it from down here, right? And you come back down, it holds support, you add to your position, right? Rips back up, right? Comes back down, you add to your position, right? All the while, if you added here and you added here, and then you add here, right? And it keeps walking it up, you add here, right? You have a very nice average of being down here, and then eventually it either hits a top and you take a nice profit, or it starts to break down and you get out because your average is way back down here, right? So it makes sense. Same thing if you're looking at like a shorter term. I mean, this is a 15-minute, right? But if you took 2-week contracts, say you got lucky and you entered, maybe on this fair value gap or something, or, something like that. You got lucky. This is the 27th of September, right? So 2-week contract. You could have added contracts last week, right? For the same contract, you would have gotten them, maybe for a good price because another week's gone by. If you hadn't closed them, you can add to your position, and another week later, you're much, much higher. So different ways you can play channels, but you just ultimately you can continue to add to your positions as price goes up. Let's look at the 5-minute chart. Right, similar things, but we got some other stuff going on as far as fair value gaps go. We still have the swing order block down here. We see our 1 hour fair value gap waiting above that we're looking out for. We got an order block right above. Right, so what if this, again, what if it starts to stay in this channel, rips up, takes this out, right? Could we hit this order block with a wick, take those orders, right, and then have it head back down? Once it gives up the channel again, we're looking at the possibly the return to the bear channel, or possibly just another test on the previous channel resistance. It could be support, right? Could end up taking us higher. Again, there's that channel, but we also got the symmetrical triangle down here. Right, so lots of different targets and lots of different things going on. If one breaks, then the other. If the other breaks, then down here, right, we got order blocks. Right? If we head up, do we take out the fair value gap? Do we trade into the order blocks? Do we break out of the symmetrical triangle? Right? Could we continue to walk this up? All different possibilities, but we got a lot of different options. So using all of the different tools that we have, we're really looking at watching for breakouts, watching for breakdowns. On our RSI, we got a slightly bearish look. We got top, lower, high. Right? Do we continue down a little bit tomorrow? Do we take this sell side liquidity that sits right here at this previous low? Right? Do we come back, grab that liquidity, head higher? Do we even trade down lower, down to that 254 or so? Right? Testing channel low. I don't think we're just going to straight up drop. Even though on the daily measurement, it said, that we could see a low of 251.15. But if you look at it in relation to time, right, we would have to basically open at that low in order to hit it out of the gate. So that low starts moving up as time goes by in the day. So let's look at today's opening price and how many candles that is. All right, so we'll use our measuring tool. We'll measure how many candles it was to today's close. Okay, it's 76 bars. So then let's measure out 76 bars from tomorrow's open. Okay, 76 bars is going to put us here. So if we don't hit that pretty quickly by close, the lowest we could be at is 253. And that was if we just, slow move down all day long, lowest we could be at is 253, right? If we were to continue to hold this bull channel. Now, if we gap down, we certainly could run a test, right? So that's what I'm saying. Lowest range 150, 115. Highest low range 253, right? Somewhere in between there could be the low. Again, the high continues to go up as the time goes on for the day too. If we were to start moving up similarly, right? If we were to just hit it out of the gate, it's 265.84. But by the time that we hit 76 bars, okay, where does that put us? Puts us at a potential high of 268.15. So I have 267, but again, potential high by the close of tomorrow. If we were to get to the highest high, 268.34. That puts us inside that fair value gap. So do we want to just run a test on that fair value gap this time, or do we want to see a test of the low? I think things have looked pretty bullish. I'm leaning to the bullish side, but we'll see what happens again if we give up this, because right now we've tested it, this median of the bull channel. We've tested it in the fair value gap. We've come up. We came back to test and took sell side liquidity here. Okay. Then we came up. Are we going to come back down and test? Probably take sell side liquidity here. Okay. Potentially tomorrow. We'll see. So that would be, below the median. But you got to understand that it would just be running a test on sell side, and from there it could start ripping up. So we're going to be watching those things. We're going to be watching this bull bear pivot. I'm actually going to put, even though it's not quite in the middle, I'm going to put that bull bear pivot down here at sell side liquidity, because this move was so structured, just back and forth, but just kind of like slowly walking. There was nothing impulsive about it. You see this wave here, just boom, boom, black candles, right? Boom, boom, black candles just getting slapped down, right? This is just walk, 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 walking the dog, right? Just up, green, black, green, black, green, black, green, black, right? Then a little bit of impulsive move down, and then same thing, just walking the dog straight up, right? These are probably the algos buy-in. We don't know for sure, but it didn't seem natural. It didn't seem very, very impulsive at all, that's for sure. And so do we see something similar tomorrow where it just kind of gets walked up? We'll have to see, but we're watching the sell side liquidity at 258 to see if it breaks. From there, we would go down to 256.20, right? From there, we would go down to 254.79 and potentially all the way out to, again, testing the low here around 253, probably 250, 252, 253 if we were to just straight up sell down. If we do that, we start closing 5-minute fair value gaps here, right? We would close this fair value gap here. So we do know that those are magnetic. Do they hit? Not always. I think we still have fair value gaps down here from the beginning that never got hit. Doesn't mean they won't in the future, but certainly, like, we see price drawn down to fair value gaps, doesn't mean they're going to hit every time. We actually want to see them respected and left open for continued direction for whatever they represent. In this case, they're bullish for value gaps, so we do want to see at least this one left open, and again, due to the channel, we probably want to see maybe this one tested and potentially left open as well, depending how quickly it hits for further upside, right? Because we think the eventual target is this 267 to 269, right? And I'm running a test on this triangle right here. And as we drop down into the 1 minute, there's not a whole lot more going on with that. Basically, we had a bullish break of structure here. Our price day opened. We immediately punched up to see, if this run wanted to hold. We sold down immediately in the live channels. We caught a scalp during the session. It was just a quick 15-20% scalp, depending on when you entered and when you exit, but it was a nice little scalp for sure. Caught it in the live rooms, called it out on the Traders Helping Traders Discord. So it was a nice little move, but we traded down again into this order block. Order block wanted to hold. Longs were there again. Sent it up. Right, we set a new swing, and then ran it up, and then as we closed the day, we saw some profit taking. So we do have a higher high, lower high, right? We do have another bullish break of structure. We never had a change of character, right? This did not change character. We did not get below this. So from back here, we had the bullish change of character here. I took out some of the internal structure because it starts to get really noisy on the indicator. And so I thought, for you guys, it's probably better to just have the swing structure labels of break of structure, change of character. So we're looking for, the potential for, if we do start going lower, that we have something like this where it's a bearish change of character. And I'm going to be paying more attention to this on the 1 minute chart as we're trading, because when this structure broke to bullish, it was a nice entry point where we could have ran higher, right? And this is going to paint the second it happens. As soon as we have a candle close above there, right, it is a change of character. Okay, and again, right here, we had a bullish change of character. You could have entered on the bullish change of character, and you caught a nice rip, right? So we have another one here. We had another one down here. We had a bearish one here. All of them good entry points, a bullish change of character here, where you would have caught a move from 251 up to 254. So lots of different ways to play that. Again, don't forget to like and subscribe. I appreciate all the support. Sorry I didn't get a video out yesterday, but things have been hectic. And if you like the content, leave a comment, share with all your friends. I'll see you guys on the next one.